Google stock making new lows for the year, down around 30% this past year, causing investors to wonder, how low will Alphabet stock go? How low will Google stock go? And so let's take a step back to understand, well, what's going on? I mean, first, their results were very reasonable. Their second quarter results showed strong revenue growth, 16% revenue growth to $70 billion in revenue, 16% adjusted for the strong US dollar. If you back out the fact that, the US dollar rallied significantly, then their growth still was around 13%. And then they still had really strong operating profits, and they have real free cash flows, around $20 billion in operating profits, around 30% margins, even higher when you just focus on their Google services segment. Arguably flat year over year because they're investing significantly in the company. And you're looking at a business. This is not a highly levered business. It's maybe levered to the economic cycle because it's advertising revenue business, but it is not a levered business. This is a business that has a fortress balance sheet, 140 billion plus in effectively cash and stock that they have net of debt. They are prepared to survive winter. And they also have moonshots that could arguably add a lot of value from here. For example, like a lot of folks are aware of autonomous vehicles, but they also have autonomous freight, that they're looking at with Waymo Via, where they partnered with Uber. That in and of itself could tap into a market of tens of billions of dollars, maybe even more, where you're talking about either long haul freight or even last mile delivery of packages. This could be a huge development over time. Another moonshot is their investments with DeepMind in terms of improving language models. And you have Ray Kurzweil, who works for Alphabet, where he's a futurist, and really interesting what he had to say. And he's had a long multi-decade track record that's arguably correct. Effectively, he's saying, by 2029, the language model processing for, artificial intelligence, the different language models that you're going to have will be so good, you won't be able to tell that you're talking to a computer. That has such dramatic implications because he's saying, 7 years from now. And he's expected to come out with a book later this year called out, effectively the singularity is getting nearer. He already said the singularity is near. That was one prior book. Singularity is nearer. So the data he's seen, once again, works at Google, reinforces this view that we are going to enter a whole new world. I mean, imagine what that means for society when it's like, hey, I can't tell the difference. You might be an expert in a field, and I can't tell the difference that I'm talking to a human versus a machine. That has huge ramifications. And that is something that Google is arguably a leader in. And so you look at these, moonshots, you look at these things that are going to transform society in the years ahead, and you look at a fortress balance sheet, great free cash flow, growth, a lot of potential. You look at the stock and you go, why is it getting crushed? What's going on? Okay, so let's take a second and to remember that, everyone has a different investment journey. Everyone has a different journey in life. And arguably, there's never just one path. You might look at the path ahead of you and think, oh, this is the way. But the reality is there's a lot of different paths that you can choose from. For example, with investing, you might look at it purely from a fundamental analysis perspective. And that's the angle that I'm frequently trying to, espouse here on this channel, Unrivaled Investing. It's sort of saying, hey, from a fundamental perspective, is this company unrivaled? Does it have a strong or reasonable valuation? What are its growth prospects? And when I consider those different factors, then I can make my own decision on whether or not I like a stock. I, for one, do own a little bit of Google stock, and I've talked about it previously. I look at the fundamentals and I'm saying, hey, this is very, very reasonable, assuming even effectively a conservative scenario, just focusing on their Google services, not focusing on any of these sort of moonshots, not focusing on any sort of revolutionary bets that they're making, saying, hey, just their search business, their advertising business, currently doing effectively $500 billion in revenue this year, assuming high single digit growth, which is lower than they've delivered so far this year. So I'm trying to be conservative, assuming 5% annual growth in the years ahead. Arguably, that's pretty low as well. And then you have a 15 times multiple. And once again, also margins that are lower than where they currently are for Google services. So very arguably conservative scenario for their Google business. And you're effectively penciling out break even, maybe slightly better when you factor in the free cash flow that this business generates. Once again, not giving any value to Google, the Waymo, DeepMind, anything else. Not even looking at their cash balance and just saying relative to their $1.3, $1.4 trillion market cap, Google services alone could be effectively break even for the stock price or over 100% upside, in over, let's say, the next 5 years. So that's what the angle of fundamental analysis, will get you. Others might take an angle of like, well, what's technical analysis saying? What is sort of the price action telling you? And if you're a TA expert, you might say, well, this market is oversold and it's ready for a rebound. So you could definitely see that as one possibility. Well, another, TA perspective might be, okay, well, the market typically crashes, when the market is already oversold. So this is the prime setup for seeing a really, really ugly further drop. So I don't have a lot of conclusive views when you're looking at short-term stuff like that, but I do have more to say about technical analysis in a second. Another angle, another path that investors can go down is considering macro analysis. What's going on with Fed policy, interest rates, unemployment, monetary policy, what's going on, fiscal stimulus, what's going on, and how will that influence my investments? And so I personally, how do I personally look at all these different paths that one can consider? And this isn't everything, but these are some of the main ones that investors consider. How do I look at it? How does this potentially impact Google stock? Well, first, if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. And so and in full disclosure, this is not financial advice. So let's look at these different paths, these different approaches to investing. Personally, I don't put a lot of weight on technical analysis. However, I am mindful that some very successful traders like Paul Tudor Jones, Stanley Druckenmiller, guys with billion-dollar wallets, they do use it. So they have found value there. In this case, even though, let's say, even though you look at someone like Warren Buffett and Charlie Munger, they go, we don't see the value here. So recognize there's a lot of different ways to do it. Be open-minded, be humble about this process. And so I look at this, and I think it's less about day-to-day price action, unless you're some sort of, very short-oriented trader. I'm more of a long-term investor myself. And once again, that affects what type of journey you want to have. But I do think it could be interesting. And price action, technical analysis does have some signal when it comes to long-term trends. For example, if the S&P 500 is below a long-term trend line, like a 200-day moving average, like it is today, and it, went below that moving average, several months ago, is the market saying something that I should be listening to? And you look at most of the returns for the S&P 500 over many, many decades, and you see most of the returns happen when it's above the trend line. So is the market starting to price in something, now that's sort of saying, hey, we should be cautious? And that arguably gets you to the macro, but this is sort of a red light that I've heard, Druckenmiller talk about, where he's mindful of the chart and he says, hey, does it look beautiful or not? And if it doesn't, he sort of discards it. Well, I think that's something to be mindful of. And look, every investor needs to follow their own process. Some folks say, hey, I'm just purely deep, fundamentals. I don't care what's going to happen to the stock price. Once I'm comfortable that my analysis on a fundamental side is rock solid, I could ignore everything else. And look, there have been some extremely successful folks like that. I mean, you have, Warren Buffett over my shoulder. I think that's a really good example, but for a lot of people, it might be tough for them to say, hey, I'm going to stomach, let's say, a 50% drop in something. Now, arguably, that's the cost of tuition, or that's the cost of admission to this game. So looking at the fundamental perspective, looking at a hypothetical framework, I'd argue it seems very reasonably priced, around 20 times free cash flow, around 18 times net of cash. So once again, that's focusing on Google. If they continue to grow just their core Google advertising business, their Google services, you could comfortably pencil out an attractive investment return, and then when you layer on additional, investments like their Google Cloud, which could arguably be worth hundreds of billions of dollars, other bets, which I'm effectively giving zero credit towards, if they effectively crack, autonomous, freight transportation, I fairly confident that that'll be significantly worth more than $10 to $30 billion. And then throwing in just the value of their cash and their equities that they own net of debt, which could appreciate in value over time. And then factoring in their cash that Arguably, they're returning to shareholders via buybacks, and that's around 3-4% a year that could reduce shares outstanding. That's effectively additional cash flow. So that, 60-70 billion in free cash flow relative to the stock price, effectively reducing the shares outstanding. And so looking at that scenario, yeah, you could pencil out, hey, maybe you're looking at over the next 5 years, a high single digits, maybe even mid 20s, depending on, how much growth are you getting. If Google services is closer to 13% annual growth and closer to 20 times multiple 5 years from now, that could be very exciting. So once again, you can pencil out a very reasonable, very attractive return for Google, for Alphabet. But of course, stock prices go way higher or lower depending on execution. If they don't deliver, let's say 13% growth, if it's closer to 5%, if their margins actually start contracting, you could see an impact on both, from an execution side, that's disappointing, but also sentiment, resulting in a lower valuation. And so that is something to be mindful of. But looking at this core fundamentals, this is why I do own a bit of Google. But I think the third key component that a lot of investors either choose or willfully ignore is considering the macro, or considering what is the Federal Reserve doing. And this is arguably one of the most influential participants in the marketplace. And, you have Jerome Powell talking about, pain. Effectively, he's going to do what it takes to crack inflation. And he's going to keep raising rates. And there's a lot of possibilities from that. I mean, when he talks pain, that sort of means, okay, your baseline now is recession. But the question is, how tough will he be? How tough will he have to be to break an inflation that might not even be caused by monetary policy at this point? You might be looking at supply limitations that he can't break unless he just breaks demand so severely. In which case, how low could Google stock go if you have a truly draconian scenario when the Federal Reserve, if he is truly committed to, let's say, 2% inflation, and that means just continued rate hikes, and you get to 4-5% Fed funds rate. So that's effectively, 4-5% for short-term bonds. You could definitely have a re-rating in stocks like Google where they'd say, hey, this could get an even lower multiple. I've done a prior video effectively calling out, penciling out what Ray Dalio talked about with how this sort of drives the market, raising rates. You could easily see a scenario where the S&P 500 drops 35%. Huge drop. And that's based on this, look, how severe will the tightenings have to become in order to, so recession is baseline. How bad, when you start pricing in an even worse scenario in order to break inflation, because once again, it's not fully a demand-driven inflation. There's a supply limitation aspect. There's the supply choke points that the Fed raising rates doesn't necessarily solve that problem. So this is quite a conundrum. And so I think it's important to recognize, okay, this is a really ugly backdrop. Should I be compensated even more? And that's the reason why, yes, I've covered Google in the past, but I never said, hey, I'm going all in. I'm making a huge bet on Google at this point, partly because I'm mindful, hey, this is a business that's 90% plus advertising driven. So if you're looking at a Fed that's saying, hey, we're going to have a recession, maybe worse in order to break inflation, advertising businesses like Google will get hurt. And so if you're in an environment where they get hurt, well, how bad is it? Does that mean you go from, let's say, high single digit growth to 0% growth, maybe even negative? Do you start contracting? Because Google is much bigger than, let's say, where it was in 2008, where it could grow throughout a great financial crisis. So I look at this and I'm thinking there's a lot of data points here that suggest one should be humble. One should say, hey, I don't know how bad this could get. I don't know how bad the economy will get. Yes, I try to have, let's say, Warren Buffett as my North Star, the fundamental approach. But I also want to be cognizant that I don't know how ugly it could get, and I want to be compensated for that. And I should also recognize that most of the investment returns occur over periods, let's say, taking these different paths. Let's say when you have long-term trends in your favor, or when monetary policy is in your favor. That is when the bulk of returns are generated over time. That's for a multi-decade perspective. That's like, last 100 years. That's what these other paths suggest, not just looking at the fundamentals. So I think it is important to consider these data points. And that's why personally, I'm looking at Google and I say, yes, it is appealing. I'm tempted to buy more, but I'm also the greater part of me says, wait because I think I can get better deals in the future. So I own a little bit of Google, and it is, I do lose a little bit of money every time it goes down, but I'm also very mindful that I think I want better deals in the future. And, that's the type of thing where I'm looking at, 200, 300, 400% upside. And I think when you have a Federal Reserve talking about pain, I think I'll get those opportunities in the future. And hopefully I'll be able to call them out to my subscribers at unrivaledinvesting.com. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. If you have a different take on Alphabet or Google stock, I'd absolutely love to hear it. If you think there's a different path, different journey, if you think I'm putting too much weight on the macro, I want to hear your thoughts. Thanks so much for tuning into Unrivaled Investing.